Nervous bidders compete for a share of the Australian dream. Half of the people trying to buy this house are investors.
Selling! Sold! Congratulations to World Board! Congratulations to her.
But this time, a family places the winning bid.
I'm amazed we've got it, and I'm really pleased because we love this area and we love the house.
As house prices continue to soar, investors are coming back into the market.
Obviously, the growth in house prices is a good way of building wealth.
Last month, the average property price rose by 2.2% across the country. Hobart saw the biggest increase at 3.2%, followed by Sydney at 3% and Darwin at 2.7%.
Over the past 12 months, national house values have increased about 10.5%. So it's a very strong rate of growth, and we haven't seen that kind of increase since about mid-2010.
House values in regional markets like Newcastle have risen by a fifth in a year, and investors want a piece of the huge capital gains.
I'd say fortune favours the brave.
This landlord says investors like him are not solely to blame for the buying frenzy.
The most activity in the marketplace at the moment is actually being fuelled by first, second, third and downsizer type home buyers.
While that might be the case, after investor credit growth went backwards on a month-to-month basis last year due to COVID, it is edging towards the same levels as when the regulator APRA intervened in 2017 and tightened lending requirements. In March, investor loans were up 12%, while new mortgages for first home buyers fell 3%.
It seems like investors could be muscling in at the expense of people like first home buyers, like lower income earners, who just don't have as much money as some investors to compete at auctions.
Banks are also competing for a slice of the investor pie. Among the big four, NAB's slashed its variable interest rate to 2.79%. The lowest variable rate for landlords on the market is 1.89%. And that's making places like Newcastle, which has traditionally had a low rental return, more appealing.
The interest rates have been dropping and the yield rates have been increasing. That's just leading to an increased return for the investors.
Despite the risks that could arise if investors pile back into property, adding further fuel to a very hot market, the Australian Prudential Regulation Authority and the Reserve Bank have shown no urgency to cool house prices.
They could step in with caps on certain lending, and one of them could be investors, but I think we're a long way away from that just yet. I think any caps wouldn't happen until probably 2022.
So, congratulations to World Board!
Until then, expect competition at auctions to intensify.